and make a lot of money. So Erez, if you wouldn't mind, come on up, have a seat, bring some food, let's all get going so we can make this a little more intimate sort of thing. So without further ado,
I'm not sure of Wi-Fi.
I would like to introduce our two panelists.
Yeah.
And we'll start with Liz on the left. Liz, please tell us about you and what you do.
Hi, I'm Liz Kuka. I'm the Director of Programs and Operations at Ethereum Plastic Labs. And I was hired back in August with a mandate to design, launch, and grow our accelerator program at ETC Labs. And just to give a little bit more context, Ethereum Plastic Labs is an accelerator, a dev team, and an investor. And our parent company is a digital finance group who's been investing since 1995 and diversified its investment thesis 5 years ago to expand into digital assets.
Yeah. Hi, I'm Sarah. I work at Polychain Capital, and we are a venture fund that invests primarily in cryptocurrencies and blockchain technology. Our fund is $175 million, and we also have a liquid fund as well. I work on research operations, so I make sure the investment process goes smoothly, and I also work on our PC 2030 side, which is our portfolio support.
Okay, well, great. So, what sort of things do you evaluate for investments, and how do they bubble up? How do they come to you? Sir.
Yeah, I'm going to start. So we typically look at three things. We look at the team, we look at the technology, and we look at the business. So we want to make sure that there's a market for it. Our kind of overarching thesis is that crypto is going to take over the finance industry and eventually every other industry. How that's going to happen, we don't know. We like to keep an open mind, and in order to find these deals that we think are interesting, we try to keep a pulse in the community so that we can actively pursue what we think is going to be the future. And hence our name, Polychain. We don't believe that there's going to be just one chain. We think there's going to be multiple ones.
And you guys have been a little under the radar, right? Your CEO, founder, Olaf, is a little notorious for eschewing the limelight. Is there a reason for that, or do you guys try to stay under the radar, or is that because a lot of other investment funds have been kind of a lot more public? Tell us a little bit about how you guys think about your outward image and how people think about you guys.
Yeah, so I wouldn't say that it's necessarily a conscious effort that we are under the radar, although we certainly are. I think we're really focused on just finding the best deals and helping teams build their companies rather than get out there and market ourselves extensively.
Great. So Liz, you guys have a little bit of a different approach because you have an incubator at the front end. Can you answer the question about what sort of things you evaluate for investment, what your intake process looks like, and how maybe it's a little different from a pure fund like Polychain?
Yeah, it's kind of a unique position having both an accelerator and an investment fund sitting on the side, but similar to what Sarah mentioned, we look at team first, it's really important. Second, we look at technology, what their tech stack is and what they're trying to accomplish. That's huge for us as well, and how will they get in the blockchain space, and are they really in it for the long term, or is this just kind of a quick add-on to your investment?
So both of you, do you all have an overarching thesis? Is there a part of the ecosystem that's more in favor right now, be it dApps, be it protocols, be it infrastructure, that one of your funds is looking at?
Yeah, I kind of answered a little bit about my prior answer, but our thesis is that blockchain is going to take over, and so we don't know how, but we primarily invest in infrastructure and protocol layers, and also hence our name, Poly. Like I said before, that we think there's going to be many blockchains, so we're very open to exploring any and all of them right now.
Yeah, so from the Ethereum Classic side, we also believe in interoperability. So for the accelerator, we ask that teams integrate with ETC. They don't have to be 100% ETC. So their main layer could be Ethereum Classic, but it could also be Ethereum and Tron, you name it, and as long as there's an integration aspect with us, it's completely fine.
Very cool. So Ethereum Classic, how important, I won't really go that far into, but how important is that? Are you seeing any exciting projects on the Ethereum Classic blockchain?
Yeah, we have a handful, but I guess to take a step back and what our team is looking for right now, we are also spending time looking at backend infrastructure as well and dev tooling. So we're looking for teams that are focusing on scalability, interoperability, privacy, dev tooling, protocol layer solutions as well, so that blockchain is more secure and usable for everyday people before dApps can really take off on them. So that's where we're also doing kind of a picks and shovels approach. So I want to say that first and foremost, and then a team that we're working with right now that is utilizing ETCs called Ethernet. It's a decentralized router solution, and the team's based in San Diego, Chicago, and yeah, they're a very exciting one for us to watch.
Very cool. So, Sarah, when you think about the crypto investing landscape over the last year, 6 months, how have things changed? I mean, obviously, publicly, a lot of the hype kind of went out of the market at the beginning of last year, but you all continue to work, right? You're kind of like the ducks. You may be calm on the surface, but you're pretty busy paddling underneath, right? Is the deal, the amount of deals that have come across your desk changed? Has the quality of deals changed? How are things different, or are they not in the last year from your perspective?
So the prices have obviously come way down, which means it's a great time to invest. We are seeing a little bit of less deals from a year ago, but the deals that we are seeing are much higher quality. And so we are using this time to get better valuations, to really invest in some really awesome technology, because the founders out there right now are not concerned with, getting the biggest ICO. They're concerned on building real technology and solving real problems, and those are the companies that we're interested in talking to.
A year ago, everyone was doing an ICO. Is that conversation at all present anymore with U.S. companies, or is this looking more like a traditional venture raise, safety, pure equity, and are tokens part of the equation at all these days?
I think teams are getting a lot smarter about doing ICOs. They've seen the SEC jump in and slap a lot of subpoenas on companies who have run ICOs without following the correct regulatory steps. And that is a difference from last year. There were a lot of SAFs that were happening, and now we're seeing a lot more just straight equity deals. We don't want to lock teams into having a token. They don't need to have one. And so going the equity route can allow for a bit more freedom. And in terms of the ICOs, I think they're still coming down the line. We don't really necessarily deal with ICOs because we're in the venture space, but I think when they have more guidance, we will probably see ICOs come back, and they may look differently than they did a year ago. But I do think that it is a way to crowdsource funds, and that's not going to go away.
Yeah, I saw something on my feed today about a gaming coin from Africa that sold out in 2 hours and raised $6 million, and that happened today. So I guess ICOs are still going on, but not in the US. So Liz, same question for you. How have things changed for what you all have been looking at the last few months?
Yeah, I don't think it's changed too much. At the accelerator, we do a safe agreement, and our parent company, DFG, does traditional equity investment. So ours is for future equity. I do still think that token offerings or ICOs are a great way to crowdfund and also to capture an audience that you couldn't in other ways. So I think that's still a really intriguing model. But for us, we're not doing any SaaS, and we're not doing any tokens at this time. So it hasn't changed too much.
So as per Sarah's comments about quality and pricing, what sort of changes have you experienced at ETC Labs?
I'm a newbie to this, by the way. So I was at Plug and Play Tech Center before, so there was no blockchain going on in the InsurTech Enterprise 2.0 world where I was sitting. I've been watching blockchain from the sidelines for about 4 years. really as just an observer, in no way as an investor. So for me, coming in and just in August, it's really looked the same. When I came in, folks told me, oh yeah, we're going to consider tokens, but no, it hasn't happened at all. So I guess I can speak on behalf of the team that their approach has changed, but since I've been there, it's really been the same.
Yeah, I can say our host here, Larry Kane from Oric, has bombarded me with all sorts of emails and SEC alerts over the last 15 months, and it's amazing how quickly the landscape has changed, and the people who were geniuses in 2017, including the person who quote-unquote invented the SAFT, are now not looking to be like well regarded because things have changed quite a bit. So the only constant that I've seen is really that everything is changing. So I think from a founding team perspective, it must be challenging to keep abreast of things and keep not kind of step in something that you shouldn't do. So this brings us to the question of STOs. Let me ask you this. I had a conversation with a traditional finance CEO who said, I get the idea of STOs, I like the transparency, I like the lower cost, but from my perspective, it seems like you have to have all the regulatory pieces in place that you would of an IPO or traditional financing. Plus you have the technological and other uncertainty around blockchain. Why should I spin this division off as an STO? Why wouldn't I just do an IPO? So, and no one's given me an answer yet, is what he said about why an STO is better. So, Sarah, why is it better to do an STO than a traditional sort of financing?
I'm definitely not an STO expert, but I can just tell you my ideas around STOs. So.
But you are a lawyer, right?
I am a lawyer. This is not legal advice. This is for investment advice. From STO is a word that you hear a lot these days. I think it is a bit overhyped in the sense that it's not the end-all, be-all of token sales. Security tokens are still under the securities law, and so you still have to abide by all the regulations. You can't get around it by looking at a security token. Which means that it's really up to the regulators when they decide that they're going to be friendlier towards it and provide rules that people can follow, and so that they know that they're in compliance. When that's going to happen, I have no idea. I can certainly see a future where equities and derivatives and bonds are perhaps traded by tokens, but your guess is as good as mine for when that might happen.
So, in your experience, when your team looks at projects as, not giving away any secrets, has the interest in security tokens increased, or are there more security token projects that you all are looking at? Or is that something that you're not kind of more involved with from an investment perspective?
I am not aware that there is any particular interest as to whether or not it's a security token.
Okay. So Liz, I think the big question I hear a lot is, when will we start seeing security token ecosystems with trading volume and liquidity? Is that something that you talk with the mothership back in Asia?
Good question. So I guess to speak to our interest when it comes to STOs or ICOs, at DFG we do have a fund that's dedicated to crypto, it's crypto hedge fund specifically. So we are very much dedicated to that space of the top 20 coins, that is. But for new projects that are using STOs or ICOs still, it's not going to change our perspective necessarily on whether or not we're going to engage with the team. It's not going to be helpful, I guess you could say. I mean, in many ways, the more people you bring in, the more people you need to manage, and that often will be the case when you do an ICO and probably for an STO as well.
Okay. Yeah, I'm kind of scratching my head at why I want an STO token when I could buy a preferred stock. I mean, I'm personally kind of wrestling with that, because if I buy, Berkshire Beat or something like that, and I'm getting a dividend, I can hit sell, and I know there's going to be a buyer for that. I guess I'm just kind of wondering out loud when there's going to be, real security token exchanges with real liquidity, TBD, I guess. Another thing that I was interesting is this week, you guys might have seen, this week, over the last few days, there was an article that basically all the volume in crypto exchanges is exclusively in the top 10 exchanges, probably more like in the top 4. And all the other ones are just total waste of space. What do you all make of there being so many exchanges? And what's the future of all these smaller exchanges?
Well, there are a handful of solutions that connect exchanges. So that's one solution on the back end, where if you have a small exchange and you're on the buy or sell side, you can get kind of connected to a larger one to help fill that kind of order, so to speak. So I think it's still an all right model. Looking into the crystal ball, I think there's more to come. I just got an exchange sent my way, DAX specifically, this morning. So I don't think they're going away. I think decentralized exchanges are interesting because you are fully accountable for what you own and what you're holding on to. So I think that's interesting. So you don't have the whole Canada fiasco happen again if you're the one that holds your own keys and you're your own custody, so to speak. So I think that's interesting. That's totally personal. That's not ETC or DFG or anybody else. That's just, personal opinion.
Okay. So, I love the concept of decentralized exchanges, DEXs as they're called. But when I speak with finance professionals, they're like, well, you're not going to get the same depth of an order book that you can with a centralized exchange. Is that the case, or do you see that changing, as you said, based on kind of what's going on, or having cross-exchange connections? Does that solve that issue?
Yeah, you would have much smaller volume or less volume, and speed is also much slower. So there's that, and you can argue that you can kind of manipulate the market a bit more because it's slower. So I think time will tell the depths.
Got it. So, Sarah, you said you guys have a lot of interesting deals coming in, and your team evaluates and does research on the incoming projects. What are 3 things that are that you look for in a potential project that are kind of like really exciting, or red lights that you're like, oh, we're not going to go forward with this? Like, how do you go about evaluating all the projects that end up coming across your transom?
We primarily invest at the seed stage, and we're starting to expand into Series A. So we don't have a lot of metrics to work from when we are first evaluating a project, but first and foremost, we absolutely look at the team, what's their background, what have they built, what are their interests and expertise. From there, we dive deep into the technology. Our investment team is highly technical. They also have a lot of startup experience, and so I think that gives us a leverage or leg up and to evaluate these projects and then to help them grow after we've invested in them. In terms of what gets us excited, it's just when people walk in with a new idea and that they're really excited about, and they're able to explain it to us in a way that we understand and that makes sense. In terms of red flags, there's none that jump off the top of my head. I mean, if you're unable to explain your idea and what you built and why, then of course, that would be difficult to invest in that company. But otherwise, I think that we hear all sorts of ideas, and we're always open to creativity.
What's the stupidest idea that you've ever been pitched?
Gosh, I honestly don't think that we've had any stupid ideas. I feel like all the companies that get through the doors to come and pitch us are pretty well thought out.
I think last year at Consensus, I met with a guy from, I don't know where he was from, but his whole idea was decentralized hotels, and they were going to buy all this really, so like decentralized hotels meant co-working and cool view, and the way he explained it was just like, what? I kind of made it. The pictures were awesome, but I thought that was kind of stupid. How about you, Liz? Since you were an incubator, have you gotten closer to stupidity than that?
I'm not going to throw anyone under the bus, but I think it was a similar, I think you and I met the same guy or lady, but instead it was with like self-driving cars, with the sensor this and with the AI that, and it just like was layer upon layer upon layer of like marketing scheme with the blockchain piece around the corner. Yeah.
Well, yeah, and why don't we talk a little bit about teams, because obviously you said you got people to come in, they look fired up, they look like they have depth. What qualities kind of, maybe not necessarily measurable, but kind of gut, or what do you see working well, where you're like, I know this team's going to do well together, I know this team's not going to do well together. I'm kind of interested if you guys have a perspective on that.
I would say the depth of knowledge that I have. I mean, typically there's, I think it depends on the setup of founders, whether it's one founder, two founders, three founders. The more founders you have, obviously, the more complex it can get in terms of relationships. I think if I remember correctly from YC stating that was the #1 reason that startups would fail, because founders split up. And so that's certainly something to take into consideration. How long have they known each other? How long have they worked together? Do they share the same vision and values? And there's certain contractual things that you can put into the deal docs that allow them to split equity in certain ways that will vest over time rather than right away, which will keep the founders are committed to the project for longer, but of course you can't force them to stay together if they don't want to.
And is there an anti-Lambo clause in your contract?
We do not have anti-Lambo clauses now.
So, there's some companies that are very specific about they only want teams of 3 or more as founders, and other funds really prefer individual founders. Do either of you have a perspective or a preference in that regard?
I don't think we have any single founder companies. I'd say at least 2. We have one team that has 4. Yeah. I guess to go back to the question before, kind of teams that we're looking for who we think will definitely make it and will succeed. We have one team we're working with right now, not to name drop unless I get permission to. It's a team of mathematicians, all from New York, with a salesman who's also an engineer. It's just a really stellar team. Multiple PhDs. When I first met them at TechCrunch this round back in October here in San Francisco, they already had an MVP. They brought it to market within a month of being with us. They just rolled out their kind of simpleton version of their product, which means I can now use it, because before it was for engineers to do back testing, and now I can actually utilize their trading solution for buying and selling crypto. And so they've just kind of executed on time and in advance over and over and over again. And I knew that when I first met them beforehand, based on kind of the references. So. Yeah,
executing on time, that's a pretty awesome thing. I have a kind of stupid founder story. A friend of mine was an investor in actually a pretty high profile project last year, and they had all sorts of drama around the raise and everything. And then he sent me a message. He said, the CEO just sent me a message saying, it's not fun to be the CEO anymore. I thought we were going to raise like $20 million and everything was going to be awesome. And this isn't awesome anymore. I quit. And the investor was like, what? He goes, I don't want to do this anymore. So it's a segue to talking about crypto winter. A lot of people say it's crypto winter because of the value of digital assets. Yet, when I talk to my friends who are in investing, they're looking at projects, as you said earlier, Sarah, prices are down, founders tend to be more realistic. It seems a lot of the investors I know seem pretty busy. What are you investing on? Are you investing in the same pace as you were before, or are you speeding up because you have more comps across the marketplace? Like, how has the velocity of what you're doing changed? Is it basically, is it crypto winner in the investing side of the business, or not really?
I would say not really. We are still investing at a very solid pace. Perhaps not as quickly as a year ago, but we may be seeing a little bit less deals, but we're certainly seeing higher quality deals. And I also think that now the prices aren't so high, that a lot of the hype is gone, a lot of the people trying to take advantage of these big price bubble are no longer in the picture. And so the people that are still there are the people that are truly building, and those are the projects that we're looking for.
And how do you value a new pre-revenue, I suppose, blockchain company? Are there metrics that you can apply across the portfolio, or is each one its own individual case?
I can't comment on specific valuations, but I would say that it's certainly a case-by-case basis. You can look out at what's going on in the market and see what prices look like there, but in terms of a specific company, it really just depends on what they're building, how far along they are, what the market looks like, and so I would say definitely case by case.
Well, before I say anything, the team I was just name dropping, but didn't name drop, one of their sales engineers walked into the room, so if you all look behind you, that's Brian Laura. You should go shake his hand at some point today. But anyway, just got to give a little bit of a shout out there. What was the question? Sorry, repeat again.
So valuation.
Valuation, okay.
Yeah, and
Yep.
Kind of as a follow-on to what Sarah said, I'm kind of surprised when projects go like, yeah, man, we're like 2 years out from testnet, and mainnet's going to be 4 years out, and I'm kind of like, are people really buying this? And there's another project that I'm pretty familiar with, kind of a celebrity technologist behind it, and they're a year and change away from having something working. I guess, how do you, not just valuation, but how do you mitigate risk? How do you control for that, especially in a world where community and uptake is so important for these projects to be successful? And that's kind of an X factor on these things.
I think our team is we're still risk takers, and that we're willing to work with teams in a market that doesn't have high rates of adoption right now. So I think we still are risk takers. However, the teams we work with, they either are on testnet or mainnet, and they're going to launch with us, or right at the tail end of when the accelerator ends. So we're not working with teams that 1 year from now, 2 years from now are finally going to launch. That's not really who we're working with. And to share a really quick story on some absurd things that we've seen lately. I had a team that they didn't want investment, they wanted a grant. They didn't understand why I would provide a grant. For what? If we're going to take a risk, they should take a risk as well and become a company and go and become incorporated. And what they wanted for a grant was $200,000, but if we invested, they wanted $1 million. And I didn't understand it all, and I just didn't. So you need $200,000 to do marketing, but if I invest, now all of a sudden you need $1 million. So it's kind of wild, the teams that we're meeting with, and who I think just obviously just want money and are just grabbing for anything that they can. So to answer your question on valuation, how we're perceiving it is, yes, prices are lower, but I guess we are doing a lot of comps as much as we can. We do see teams it's difficult because if we have one team who's comparing themselves to a $100 million company and they're a team of 5 with no sales, it's kind of absurd. And so it's IP if they have any, and then team.
This past week was the Game Developer Conference here in San Francisco, and I met with a bunch of different teams. I was actually at the blockchain gaming event. It was interesting because a lot of projects I've been following over the years so are now, well, we're in games, we're using blockchain, but we're not kind of leading with blockchain. Do you see that in any of the projects you're working with that are not focused on a token, or using blockchain for something specifically, but are trying to be kind of more upfront that, hey, we're a we're a supply chain or we're a, player identity thing, and gee, blockchain just happens to be the plumbing. Is any of that kind of popped up in your world?
Not so much for us because we do invest at the protocol and infrastructure level, and the blockchain is generally a core part of that. I do think if you have a company, then that is probably a better way to pitch it to investors rather than using it upfront. A lot of companies build blockchains that don't need them, and so it's if you're doing a supply chain or something along those lines, then you really use what's out there rather than trying to build your own right away.
So I love wrapping up investor panels with the dreaded keyword predictions. Do you all have any predictions that you see 6 months, a year out popping up? We'll just take that quick and then we'll have some questions from the audience.
Yeah, I'll go. For my own personal predictions, I think that the market's going to continue to build and strengthen. I'm always very impressed by the resilience of the blockchain community, especially in the light of all the bad media and the low pricing. I think people are really focused on building, and I'm really excited to see what comes out of this.
I think there's going to be a lot more interoperability. Most teams I speak with are not gung-ho on just on blockchain. Generally, I've been advising teams to diversify and to put their eggs in multiple baskets, put them in ETC and E, and kind of be prepared for what kind of takes the lead, I guess you could say, but really interoperability. And then I think with Facebook's recent announcement and JP Morgan as well, I think we will see more mainstream adoption as things become adopted by major enterprise.
Very good. Well, thank you very much, Sarah from Polychain and Liz from ETC Labs. Big hand for our guests. So we have about 10 minutes for some questions from you all. If you want to raise your hand, I'll come out with the microphone. We can ask her. Yes. Okay. Yes, sir.
Hi,
And just say who you are.
okay. My name is Eric, and we do have a decentralized application, DApp or DApp, however that's said out loud. And regarding ETC Lab, you mentioned some kind of interfacing with Ethereum Classic. What does that mean? So we use the Web3 stack, for example, and we also use various test nets, which are all interoperable with tokens that with nets where tokens actually trade for value. So what level of integration or interoperability would your accelerator really be looking for?
Yeah, the type of integration that we would need, for example, is your team, if you're not already able to integrate with Ethereum Classic, we'd be building out a library for developers to be able to do that. So it just depends, I could need more information, but it would have to be as simple as that. So maybe you need to list ETC on whatever it is you're doing. The tricky thing is with maintenance. So is it something that your team is able to maintain for the long term, or is it something that you want ETC core developers to kind of take over at some point?
Okay.
Yes, anyone else have a question? Yes, Nicole? Okay.
I didn't raise my hand, but I was nodding my head quite a lot because I'm seeing similar things to what you're saying with just Andrew Capital and looking at some investments. But one of the things that you brought up was that you're not necessarily, well, I don't know, are you seeing the difference in the structure raises? Like I'm seeing a lot of companies go to equity raises where they just weren't before, and they're also leveraging blockchain technology in different ways that the rest of the world digests maybe a little bit more easily, or maybe they're articulating it differently. So I don't know if there's a question there. I'm sorry to ramble, but are you seeing teams and technologies more worth to the marketplace as it is right now because of what's transpired over the last 6 months in this space.
I can take that. So a lot of the companies that, well, to answer your first question, yes, we are seeing what used to invest mostly in stocks, and now we're doing much more states and equity raises. So that's definitely been a trend that we've seen as well. In terms of use cases, I think that a lot of companies are still struggling to figure out how to use blockchain in the real world and what is going to be valuable and how they're going to make revenue. And so that's certainly a broad overarching challenge in the industry. We are seeing a lot more companies coming in the decentralized finance space and a lot of kind of picks and shovel type companies, whether it's dev tools or governance mechanisms, like how governance will react once it's put onto the blockchain and people are voting. And so there's definitely a lot of thought going into other types of blockchain technologies rather than just building like the protocol infrastructure layers. New use cases, yes. We definitely need a lot more of those.
Hi there, my name is Steve, and this question is mainly for Sarah. Liz, feel free to chime in. In terms of the split of investments in enterprise versus public blockchains, what kind of split do you currently have in terms of your investment percentages?
I'm not aware of any enterprise blockchain investments that we currently have. I could be wrong, but I'm not aware of any, so I'd say 0 to 100.
Thank you.
So that was great. And before we take a 5-minute break, I want to introduce you to our host, Mr. Larry Kane from Oric. Larry, you want to just give a quick blurb about what you all do? You've been a blockchain guru the past year.
Yeah, my name is Larry Kane. I am an attorney. Worked here at Oric for many years, and at our TCG practice, technology companies group practice, we have a very large blockchain group that's international, and we've seen a lot of things you guys are talking about today. So thank you for coming, and happy to support Crypto Mondays.
And a big round of applause to Larry for doing this. Thank you for doing such a nice job. So thanks again to Sarah and Liz. We're going to take a quick 5-minute break and we're going to get set up front with Kyle Ria. And Kyle is going to do a presentation about how he thinks about trading, both from the mental perspective and then actually how he goes about trading. And he's going to show you some of his 300% wins in the last couple months. And then we're going to do some actual live trading with Kyle. So grab something to eat, grab something to drink, and we're going to get going again in 5 minutes. Thanks.
Could you just do a quick picture from...
Sorry, I rambled. I didn't.
No, it's great. So,
I'm nodding.
I
thought I was going to get away with just nodding. No. Put the bed or direct a tiny bit.
Sure.
Can you go
a friend, and an all-around cool dude. You can tell that Kyle is from LA, not just from his good looks or his sharp wardrobe, but Kyle's actually a pretty famous dude, photographer, and art guy and all that sort of thing, but he'll give you a quick overview. He's going to walk through a little bit of his thinking around crypto trading. He's also a mentor and instructor in crypto trading. He runs online crypto trading seminars, and he does individual coaching for crypto. So yeah, without further ado, ladies and gentlemen, let's give a round of applause for Mr. Kyle Ria. Thank you.
Thank you. Hello. I have taught at big groups and small groups. This is a little intimate, so I'd like to ask a couple questions first. How many people are currently investing in crypto? Pretty much everybody. Okay. How many people are swing trading? 2. Okay. So there's completely different ways to invest. If you're a day trader versus a high net worth investor, you're going to have completely different strategies. So basically, I got into crypto in 2015. Actually, I heard about it in 2011. I didn't invest. I was like, what's that, earn money? And now, look where we're at. So I spent about 6 months just researching everything before I put any money in, and I've been teaching for the past year and a half. And I pretty much figured out, it's like a game to me, so we'll get into that. So what I'm going to teach you is how to limit your losses and maximize your gains from my perspective. I'm not a financial advisor, I'm not a tax accountant. This is just what I did, what worked for me, and it's worked for tons of students. I've helped a bunch of people privately, and I also teach online. So I treat this like a game of chess. Most people look at it like an investment. I look at it like a game. I grew up on video games, got really good at it. I've always played chess. And I think most people that I learned from treat it one-dimensionally. Like some people say, it's all about technical analysis. Someone will also say the best way to make money is mining or staking or whatever. Everybody has a different way that they trade. I tried everything myself, so I could kind of like piece it together. And I came up with a game. So who I am, I got a lot of online businesses. I've been building computers for like 15 years. I growth hack. I've done a lot of marketing. So that's a little bit about me. But let's get into this. These are some of the people that I learned from. Tony Bays on the left, he's a technical analysis from Wall Street, got into Bitcoin. Kyle Ria, I've been following him since the very beginning. So here we go. And the key to profitable investments in crypto is 3 things. Information, treating it like a game or having a strategy in place, and then your health. Especially if you're an investor, you're not going to make very good investor decisions if your health is not top notch. I know a lot of you in here might be more high net worth type rather than the average everyday trader, but when you sit in front of a computer for 6 hours, your oxygen starts slowing down your brain, and you're not going to make good decisions. So what I say is always try to get out and exercise. All right, so looking at it from 2 perspectives, we have fundamental analysis and technical analysis. I have this slogan at the bottom, move like water, like Bruce Lee taught martial arts. Why was he so good? He was just moving with the flow. So if you want to be a really good trader, you have to kind of move with the flow of what your trading style is. We're going to get into different trading styles shortly, but fundamental analysis, whether you know this or not, is rumors, news partnerships, hacks, and scams as well. Acquisitions and expansions, updates on hard forks, government regulations, mining, global financial economy, market cap, and market cycles or volume. So you're looking at those aspects when you're trading versus technical analysis, which is more hands-on, like graphs and charts, trading tools, crypto markets, the volume of the coin, trends, past data, and using a lot of math, which I wasn't really good in high school, but all of a sudden I'm really good at it. So whether you know this or not, I did the math. Okay, if you're getting 10% compound interest every day on your trades, you can turn $1,000 into $1 million plus in 67 days. That's if you don't have a loss, and it's completely doable. You just gotta focus, like really good. If, let's just say that's $100,000 and you're gonna turn it into 10 million, that's possible too. You gotta trade a little bit differently because you gotta have liquidity volume in order to cash out. But I just want to show you guys a roadmap that if you kind of have a game plan going in and you kind of have objectives of what you want to achieve when you're investing. I know a lot of big investors, like one of my clients with like $150 million, he wasn't really sure what to do. So we kind of gave him a different strategy and gave him a diverse portfolio. 2 weeks after mentorship, he came up 35% of his portfolio based off of kind of what I'm showing you guys, but the in-depth version. So here's a lot of do's. Some of these might be obvious, but invest only what you can afford to lose. I know a lot of people lost a lot of money. I've seen it in the news too. Have a strategy going in, treat it like a business. What I tell people is create a business plan ahead of time. A lot of people, they just hear the hype, like, oh, Bitcoin went up this much money or whatever. Next thing you know, they max out a credit card because some exchanges still allow that, and all of a sudden it tanks, they don't know what's going on. They pull their money out of the loss. What can you do if you didn't know how to pre-plan for that? So have an exit strategy. We'll get into that a little bit, but I'm going to show you how to play with house money. So the real strategy is, let's say you put in like $100,000. Let's say you make $50,000. So you cash out that $50,000 until you get to 100. Just play with house money, unless you're in it for the long haul. So another thing is get properly informed. Information, and it seems hard to find really good information nowadays. I know I'm not trying to like tank CNBC or anything, but whatever they say, the market usually does the opposite. But there's really good informed like blockchain developers networks, private crypto groups, people that are really paying attention. Because if you go to enough of these events, you're going to start meeting the developers, they have information for you, you're going to meet other people in the space, investors of different trading styles, investment sizes. Everybody has information, so I'm glad that it's weeded out right now in this bear market or whatever you want to consider it, because now you can meet people who are in it for the long run and they make better investment decisions. And then obviously check your emotions at the door. You can get a really hot trade and then get really excited and make a bad move and then been there, done that. But also don't watch a coin going up and then jump in too late and then sell at the top of a peak. Okay, so causes of market movement. Hard forks, airdrops, pump and dump, and a lot of people are into this, but I got a lot of bad things about that. Rumors, news, partnerships, hacks and scams and glitches, whale investors, coin burns, new listing and pairs, contests, and FOMO. All these different things can cause different market movement. If you didn't know about any particular one of them, you might be in a trade and not know why something is like completely fluctuated really fast. So the more information that you have, or at least if you have like a roadmap about what to expect in the crypto space ahead of time and not have to figure it out the hard way, you're going to have way better investment results. So crypto exchanges, there's two kinds. There's fiat in and out, like Gemini, Coinbase, Kraken, CoinMama. I would say look at what are they looking for as far as like how much can you cash out without KYC? Are you an institutional investor or a retail investor? What's their fees like? These are different things that I like to look for when I'm signing up for exchanges. And then there's also altcoin trading exchanges where you can't cash out to fiat, but you can change a lot of altcoins in the space. And so what I'd like to say is sign up for several exchanges at once. So if one of them freezes, one of them gets hacked and shuts down, like who was it, someone who died not too long ago and that exchange got shut down, $140 million, can't be accessed all of a sudden. So what happens when something like that happens and now you have to wait another 2 weeks to cash out because you're not signed up for a second exchange. And you have to KYC in order to get all your money out. So always have a plan B. Here's what to look for in exchanges. There's a lot of them. Instead of going in depth on all these, I can send you guys a slide later, so you can kind of have this overview and what to look for. I really want to get into the actual trading stuff, but you can see there's a lot of different things to look for in exchanges. Here's what tools I like to use when I trade. These are my personal favorites. They're the ones that make most of my trades up. Bollinger Bands, RSI, triangles, and a 3 mountain peak, Elliott wave, curve tool, and volume. I'm going to show you some of these on Binance as soon as we get done with this presentation. We'll say probably don't use more than like 3 to 5 tools at once if you're actually in there trading yourself, because then it gets really confusing and you forget how you're trading. It's really confusing. Trading styles. So there's 4 trading styles. These are the 4 main. Scalp. I don't suggest scalping ever until you really know your trades, especially not with too much of your wallet, maybe 5% at most. That's what works for me anyway. But scalps are high risk, high reward because they can fluctuate really fast. They can go up really fast, go down really fast. So if you're trying to time it, timing is never 100% accurate, but you can make a whole lot of money doing it. I've done it so many times. I've also lost a little bit, but better results. Swing trading. It's kind of where you're swing trading the volatility of the coins. So what you want to look for, and actually, let's just pull up Binance real quick. I'll show you guys what's up. Okay. All right, so volatility. I would be swing trading this. Okay, so this went up, it was up to 155%. We're looking at a flat chart right here. This is what a lot of pump and dump groups love. They're waiting because everybody's kind of ignoring this coin. So you will see massive, massive buy-ins. I can explain how pump and dumps work, but it takes a little bit of time, so just ask me on the side. I'll show you exactly how they work. There's nothing you can do about them. They're not regulated enough. But as far as swing trading goes, I would probably look for some sort of support zone or look for volume to like thin out here and then buy in right there. And we're looking at percentage. This right here is what we really want. If this moves faster than the volatility of Bitcoin, you're gaining all this percent. So let's say you buy in for $1,000 and let's say you had $1,000 worth of EBX right here. You hit that and it goes up to 155%. You just made $1,500. Fastest ROI I've ever seen in my life without dealing anybody. Anyways, that's how we trade volatility right there. And we'll get back to this in a little bit. Okay. Okay, in margin trading, don't mess with that unless you really know your charts. It's outlawed in the United States. My BitMEX account, even though I was using a VPN, we got liquidated. Binance just announced that they're going to have margin trading, so it's interesting to see what the SEC says about that. We don't know if they're going to audit them, if they're going to try to like close out a little bit to USA investors. So we got to just play that one by ear. But margin trading on BitMEX, I don't know how many hundreds of billions of dollars of trades that they had since Q1, but it's like some ridiculous amount. But the thing with margin trading is if you misjudge and you have too high of leverage, you're going to lose all your money at once. And that's how it works. And for holds, you want to look at use cases and value indicators. So this is the main part where you want to do all your research ahead of time and have a strategy for long term. Who cares if it goes up or down? You know that this coin or this project has a real use case and is definitely, or most likely definitely going, because we don't know it's blockchain, actually have some sort of value in the long run. This is what I look for in a scalp. Basically volume, charts, and timing. Those are the three specific things that I'm looking for. I'll show you as soon as we get done with this presentation on the exchange, the 4 different types of trades that I make so that you can have a better understanding of how you would approach it later. So make sure you have all your tools preset ahead of time. You want to have everything just like ready for you because it's all about speed. It's like in a Western, when people are doing a quick draw. Whoever draws faster is the winner eventually. So that's how you want to treat this. Shut your extra browser windows down because it can slow down your computer speed. You want to have a really fast, good internet connection because if something happens in the middle of your scalp, you could lose a lot of percent. Preset your trailing buys and sells, so you need to get your timing down with that. And then know your risk tolerance, obviously. This is what I look for in a swing trade. Volume movements, the percentage of gains and losses from the previous 24 hours. I look at the charts, and I look at upcoming news, in which I normally look on CoinMarketCap. I'll show you on there as soon as we get over this presentation specifically what I'm looking for there. And then have a reliable source of streamlined info to help you make a quick, effective decision. Usually that's done in like a crypto group because where else can you get fast information that is reliable? When you have all the big conglomerates running the information, they're only doing what's best for their investors or their investor buddies, not for the little guys. So looking at it from an overall perspective, information is literally the key to successful trading. This is what I look for if I'm going to short. I haven't shorted in a while, but that's because I don't have it available to myself in the United States. But what you're looking for to short, and this is where you can make a killing, literally. Let's say you shorted Bitcoin at 20,000, and you put, let's say, 50 or 100 times leverage. You would be retired right now. You wouldn't even be here. You're going to make so much money. So you're looking for overbought coins. You're looking for charts that are literally going like a mountain. So you want to short at the top. But a lot of margin trading exchanges only have main top high liquidity coins, ones that have already proven themselves. So I know BitMEX was like Tron, Ripple, Ethereum, Bitcoin, and Bitcoin Cash. So we're also looking at previous all-time high or all-time low because we want to kind of see, like, is it still have a chance to go up a little more, or is it going to dump? So you really want to be very, very sure that when you place that trade, you have a stop loss. And then a track record of the coin. This is what I look for in a hold, the long term. Okay? Long term to me is 3 to 5 years. It could be different to any investor. I always like to look at, is this thing going to be around in 3 to 5 years? Sometimes you just can't know because there's so many similar coins out there. Internet bubble, I was kind of young then, but if you look at like Amazon, you look at Netflix, it just wiped out the competition. When somebody says, we're the first to do this in blockchain, I don't really care. I've seen so many first timers fail and lose all their money. I personally know someone who lost like $15 million in fundraise within 2 months. I'm like, oh my God. You had no strategy. Even a lot of these businesses raising funds for their ICO have no trader on board. They don't know what they're doing with their money, or it's locked for a certain amount of time, which is not good in the crypto space because there's too much volatility. So look at, for a hold, the use case. What are they doing to better the world? Like, if they don't have a use case, I won't even invest in it. I won't even look at it. But when you look at something like a gaming coin, there's a lot of partnerships with games right now, and that's where all of the marketing comes into play because, like Fortnite, they have like 40 or 50 million followers. So let's just say someone partners with them for a crypto coin. That thing's going to skyrocket. Okay, look at partnerships. Who are these coins partnering with? Who's on the team? Do they have a good track record? What's the roadmap for the future of this coin? And how close are they to hitting their milestones? Their comparables, track record, supply and price, and what exchange is it on? So if it's not on a lot of exchanges, it's not going to have a lot of liquidity. And then claims, what are they claiming they can do? If it's ridiculous, then stay away. Prepare yourself. Here's what you need to prepare yourself before investing. Exchange for fiat entry and exit. You need an exchange to exchange cryptos. TradingView. I love TradingView. You can find so much good information there. Market cap. I know that they have some fake volume on there. They did get rid of the Korean market cap on there last year, so you saw just a massive market cap tumble, and then more people got scared because they thought all the money was out of the space. It wasn't out of the space, but they sold out because of that, so you got to look at these things. Bot indicators, you can use them on Telegram and Discord and other places like that. Look at the news, and then taxes. You need to have some sort of way to quickly do your taxes. I know pretty much everybody needs that. And I talked to a lot of tax advisors or tax preparers who were actually putting a training tutorial together for them how to quickly put together taxes for all the investors. Buys and sells. Before you get in, you want to dollar cost average in and out of your trades. You never want to go all in, trust me on this. You could lose all your money, you can also make a lot of money, but it's better to dollar cost average. Always have a stop loss. Trade versus stable coins because it's a flat currency, so if you're trading and you want to trade back to a stable coin, you're not going to lose all your percentage that you just traded to get. You got to do the math with your maker taker fees, usually they're pretty nominal. On Binance, you got Binance Coin, it lowers the fee. So every trade you make, you need to make more than the fee itself. Math of the coin versus the altcoin market. So if you're trading on like an Ethereum market, if Ethereum's like on a run right now and they're going up 10% a day and the other coin went up 8%, you actually just lost 2%. So you gotta do the math based off of that. Playing with house money, this is what I was talking about earlier. Try to make as much money as you can fast and cash out your original investment so that you limit your losses. And then reallocation of wins. So every time I get like a 25% win, I'll take about 25% of that and throw it into Bitcoin and just stick it in full storage and forget about it. Diversify portfolio, I would say probably, in my own opinion, up to 10 coins that all have different use cases. If you're swing trading, I never hold on to any coin for too long. I'm just constantly swing trading every day. If I'm going to take a step away from the computer, I'll just store it in stable coins or in a coin that I feel like in the next week or 2 weeks or a month or whatever is going to go on a run. And then moving averages. That's kind of what the technical analysis Bollinger Bands. I'll show you some of that too. Always do your own research. Watch out where you're getting your information. I can tell you, like CNBC, a lot of people follow it religiously, but I've noticed, because I've been watching very, very specifically, we just saw them announce something about Bitcoin's doing bad. What that means for big whale investors is they're trying to drive the price lower so they can buy big sums. So this actually signifies we're probably on our next bull run pretty soon. Just that one indicator. Obviously, you're not going to make your full judgment off one indicator, but looking at different things like this, housing bubble looks like we're getting to our 10-year. S&P 500 looks like it's about to dump. Where are they going to draw their money? Probably crypto. All right, this might be obvious, but when you're in a trade itself, you do not want to buy in the green. Always buy after it dumps because you're going to catch a bounce. So buy the dip, sell the peak. It may seem a lot easier than what it looks like. That's why you gotta use technical analysis and fundamental analysis and kind of review everything. And then stable coins. A lot of people have various opinions about stable coins. I love them. Tether itself, not so sure about Tether. It's been around for a while, but the fact is they claim they're pegged by the dollar, but they can't prove it. So the great thing with Binance is they have multiple stablecoin pairs now. So you're not stuck with just USDT anymore. So if something happens, all your money could disappear overnight. That is a big liability, especially for adoption. Everybody wants to know their money's safe. So being able to trade back to a stablecoin is literally imperative for a trader or an investor. Everybody should be using stablecoins. I know people like Gemini has the Gemini dollar. A lot of these big corporations are using it to actually send their finances faster than a bank or wire transfer globally, across borders, no issues. So you're going to see a lot of new banks probably do that, like the JP Morgan Bank coin was doing that. Facebook, I think, in my opinion, they're probably going towards a stable coin. But they can bring in, 3.1 billion potential new crypto investors. So it's good to look at stable coins. Later on, if you guys want a stable coin ebook, we just finished like a 60-page, my network and I finished one that has all the information that you possibly need for stable coins. So 2 things, we'll get into this after I show you some Binance stuff here. Okay, so getting into trades. Quickly, I'm going to show you where I get some good information as a reference. Afternoon, these are like the legit people. A lot of them might have opinions, but they're coming from the actual tech people. Reddit is where you're going to get all of the quickest crypto information that you can find coming from the source, because all of these coins have a Reddit page. And then people, you gotta look for your legit crypto influencers. This is where I gotta get good information. There's a lot of companies that also use Twitter to give out their announcements, and that can trigger a run on a coin too. Coin tracking, I don't know if you've ever heard of this. This is what I use to prepare my taxes. They're pretty accurate. Anybody who's investing in crypto, whether you're a hedge fund or you're a regular investor or whatever, this is what I suggest. I've done a lot of research trying to find this. There's other people that have service like this, but they're the most in depth and they have the most APIs with all the exchanges, major exchanges anyways. So here's where I go to do my research, usually crypto or CoinMarketCap. There's other exchanges, other websites like this that give truer market caps. I know a lot of the information was inaccurate sometimes, but for the most part, it helps me with all kinds of investment decisions. So we're looking at something like a market cap size. It was recently 140 billion over the weekend. Now it's 137 billion. Is that really going to move the market that much? Depending if it's an altcoin with low market cap on an altcoin, it could move that coin particularly. But what I'm also looking at is Bitcoin dominance. It's 50.7%. A week ago it was at 50.3% when all these altcoins were just pumping. So no new fresh fiat's coming into the exchange or into the market, but you're seeing the different coins pump, which can only tell me one thing. The same money is rotating to different coins, and it might be a pump and dump group, but you can take advantage of that. Because as soon as it triggers a lot of volume, I'm going to show you here, this had to be a pump and dump, unless there was some sort of information that was just like mind-blowing in partnership or something. But when you see something like this, and you start to see the volume just go crazy, anything over 1,000 BTC currently with that market cap is showing that there's a lot of people trading, and that's what I'm always looking for when I'm trading. So a good scalp would be something like this. You know something's going to happen. If you're not patient, I mean, it's a flat coin. It's not losing you money. At some point, it has to spike up. So this would be a coin that I personally would invest in if I was patient, or at least put a little bit of my feet on it. But if I was going to scalp, this thing would be like climbing. You would see like the buy and sell just going insane. This is the wall I was talking about. I like to reference like Game of Thrones. Because they have the big wall, and they have to climb up it. But once you can get through the wall, this thing is going to start being more volatile. I don't see it going back to a flat chart anymore. So these are things that I'm looking for when I'm trading. The difference between if I was just like a normal investor versus like a high net worth investor is, can I liquidate my position if I have to or if I want to? Okay, it's pretty safe, quote unquote, investing in something that's not losing money. But when you start seeing patterns, because I'm like in here for 2 years straight, every single day, I see patterns. And this is a pattern that you can make a lot of money off of. Look for flat charts. Another thing that I look for I use Binance a lot. I mean, there's a lot of exchanges, but Binance is my favorite. I'm looking for volume, okay? When we're looking at small volume like this, that's nothing. How can you liquidate? If you bring in like 10,000 Bitcoin, you're a big investor. You can't liquidate, there's no way to buy it. So what I'm looking for, personally, is something around 1,000 and going up. BitTorrent. I've been waiting on this one for a while. I'm going to show you guys a very specific strategy. I always show my students, but this is like making me so much money, it's ridiculous. Okay, so what I'm doing here, when you're looking at wicks, right? So you're buying low and selling high. There's not a lot of liquidity, but it's not moving up drastically or down drastically. So I could buy a position right here and then immediately set it for 1 sat higher. Because we're looking at sats. If this was 20 sats, each sat is over 5%. If you do this every 3 or 4 or 5 days, after 30 days, you probably get about 40 or 50%. Where else can you get 40 or 50% with very low risk? It's not really easy. I've run a lot of online businesses, and that's way more of a headache than this. So basically, that is one strategy. I'm looking for low sat coins that have high potential to blow up. BitTorrent has been around since 2001. Tron just bought it. So, you know Justin Sun, if you look at him, he drives prices. Maybe they don't have the best use case compared to another coin, but the dude's a marketing master. So I'm looking for things like that. We're probably pretty close to the end of the hour, but if you have anything specific, I could go through a couple more things real quick, but if you have any specific questions, go ahead and ask me. I'll show you one quick thing real quick. Binance Coin is going to keep going up and up and up. It's gone up 300% in 3 months. I want to show you how and why it's doing this, so you can kind of get a perspective. So it's just not going down. It has so much roadmaps about all the release of new projects. They just had an IEO. Nobody talked about that yet. It's an internet exchange offering. So basically, we're seeing a lot of slowdowns in like ICOs, stuff like that. So now the exchanges are starting to do their own. I know KuCoin, I think, was going to copy what Binance just did. There's going to be a lot of offerings happening on the exchange themselves. Why does it benefit Binance? If you're going to invest in Binance Coin, you have to use Binance Coin or Bitcoin to invest in these offerings. So that's driving up the price. If you hold on to Bitcoin as a trader, you get a lower fee, as you can see on here on the VIP. But if you hold more Binance Coin, it lowers your fee over time, and you get all sort of concierge. So there's a lot of things that they're doing right now, and they actually have cold storage on their actual exchange, which is really cool. We're going to see this coin just constantly go up and up and up. Its all-time high is $30, but we're already halfway there again. That's moving faster than any other altcoin that I see. So when I was telling you about storing your money on a flat currency stablecoin, stablecoins are not always going to be $1. They might go up 1%, down %, but it's a whole lot faster than any other coin that you're trading. that's probably the best thing that I could show you there. And then if you're going to buy and sell, the suggestion I have is doing stop limit orders. So I bought in here and I thought it was going to keep going up, but I wasn't sure, and I set it at about 5% or so. I never try to do anything further than a 10% loss. And honestly, 10% is a lot. So I usually try to do 3 to 5% stop loss on any trade that I do, unless it's a scalp. The scalp, I'm just trying to move up, so I'm trying to time it. It's higher risk, but you can make a whole lot of money doing that. But if you're doing regular trades, I'm basically hopping over here, and as you can see, I kind of set up one for Raven Coin, which kind of went nuts the past week. Nuts, look at that, 500%. Engine Coin, you might have heard about that too. There was a Samsung Galaxy announcement that they're going to partner with them for the crypto wallet, and so things like that, people are more likely to invest in something like that quick because of hype. They're going to get in and get out because we're not seeing fresh fiat coming in, so they're looking for the next thing to hype up, take the profits, sit back on the sideline, and reassess. So I definitely 100% hope that you guys are using TradingView personally as a trader, or going to find all of the other people that are on here that give you TA for free. I mean, look at their track record, obviously, and everything's speculative, but some people are really accurate. Other than that, if anybody has any questions, anything to do with crypto investing, I've done everything. Mining, lending, trading, every single style that you can possibly think of. I've helped high net worth investors, I've helped regular people starting with their first $10. Any questions you have at all, feel free to ask. Yeah,
Okay.
I could probably just say it.
Yeah. So how are you using TradingView? You're just using that as a charting tool to draw your own charts, or?
Exactly. There's a free version, and then there is a pro version. I'm going to be going pro soon. I had not been trading a lot until just January because I've been traveling all over, teaching people all over the world. So I haven't really had a lot of time to sit down and focus.
So that's just because a normal broker doesn't have technical analysis tools for crypto assets, or?
Most of the exchanges have TA.
Yeah.
I think that TradingView has the most tools, and it's already a community of people that are trading like that, and you can get, like for myself, I'm an educator, so I want to have public, I want to show my calls publicly. If you're not a good trader, you don't want to do that because your track record is good. My accuracy is with these, I think it was 80% or something with all my public trades. And these are not all the ones that I make calls. I have private groups where I make more calls, but these are the ones where I'm really confident, like Stellar. Look at Stellar. I may not be exact with my Elliott wave, but when you come up here and I do a follow-up, that's pretty darn close. You're still seeing a zigzag. We know that was going to go up. The Coinbase listing ahead of time. So with TradingView, this is probably the best tool to use for your indicators, for your TA indicators. And that's probably half of trading right there. Some people, I follow a lot of people on Instagram, but some people say it's the only thing you should use. I don't agree with that. Like Tone Bay is really, really into trading. He knows his stuff. But there's too many outside plays that will move Bitcoin. And when you see futures and stuff like that, now you know the whales are trying to push it up or push it down. You've got people working quietly on the side with the margin trading accounts, friending them to control the market. There's a lot of things that aren't said that you can just see based off of what happens on the market. You'll see Ripple just pumping out of nowhere. Why? When you have that much market cap and they competing with Ethereum for 2 or 3 spot, you know something's going on there. So these are things that I look for. Even though the news will say one thing, I have a high BS detector because I can see patterns. So you'll see these two guys are going back and forth all the time, look how close the market cap is. At the end of the day, it doesn't really matter if it's 2 or 3 because they're completely different coins. XRP is for finances, Ethereum is to build blockchain off of. So I'm always looking at who's the next this and who's going to acquire this, what enterprise is going to acquire this coin, how's it going to affect the price, who's partnering with what. That's kind of what I'm really looking at from the overall perspective. It's like a Game of Thrones, really. It really is. Any other questions? Specific trading questions, exchanges?
What are your thoughts on you mentioned fresh fiat? Do you expect this wave of fresh fiat to come back at some point? If so, what would cause that?
Fresh fiat. Okay. I think this is like 2 answers. Fresh fiat is going to depend. A lot of people say the Van Eck ETF. I think we still have a little bit more in the space to clean up. We're looking to clean up all of the coins that have no use cases that were like a lot of scams. Like we're getting rid of the BitConnects. We're trying to anyway. PayPal, for instance. If I have an issue and I spend money and there's an issue, they're going to give me my money back some way or another, usually. With crypto, if I send it and I actually got scammed doing this, sending somebody I trust for a service, they have my money, I don't have my service, what's going to happen? How can we bring in trillions of dollars if the simplest transaction, we have no protection over it? So we're looking to try to fix things like that in the space before fresh fiat can come in. A lot of people need to be educated. It has to be simpler. If anybody has seen Silicon Valley, the show, the big issue with them is they're really smart guys, but their app was not ready for the general public. It wasn't clean, simple. It wasn't like iOS. It was like type in all these commands and do this and do that. The average person has no clue. They want to trust it, but they can't trust it when people are getting scammed every day, when people aren't educated about how it works, when SEC is trying to figure out what's going on. So once we get that cleaned up a little more, I think the institution money is going to come in behind the scenes, OTC probably, which we won't see in the exchange because they're kind of holding on to it. The money on the exchange is what gets regular investors excited. So we need to see a whole lot of positive news. And it was kind of like a cycle. 2017, everybody got hyped. They're still kind of down about it, but they're starting to get more comfortable again. Even the show Billions mentioned crypto 2 times in one season. I think it was season 3. So we're seeing a lot of mentions of it. So they're keeping it in the back of people's minds. If you look at it like a dinner table analogy, 2017 was like serving the appetizers, getting everybody in the room like what you guys were doing before we started this event. Everybody's kind of chatting. Now you guys are sitting here, waiting, educating yourself, taking notes. Same thing with crypto. All of 2017 was a test to see how far can we go before it breaks. It broke in several different places. Now we're trying to piece it together. And then the time we open the doors, we need to be 100% ready for everybody coming in, that there's not going to be a big headache, a big lot of issues, or it's going to crash the entire way the world runs all at once. We can't do that all at once. It has to be a little at a time. Does that make sense? Cool. Day trading, high net worth investing. What's up?
I have a question.
What's up?
So, I trade. I can't say that I'm a good trader, but I trade.
You can get better.
Anyone can get better. I'm just wondering, on a daily or weekly basis, how many different tokens do you hold or trade, or do you specifically focus on a few at a time?
Because I've tried everything, I treat it differently. Like most high net worth investors are never going to scalp, ever. And it's smart, you shouldn't. But for me, it's like a video game, it's like playing Tetris. So I'm looking for everything. Like Seller was just listed yesterday. You guys heard of Seller?
Yeah.
Okay, that was the first raise, I believe, on Binance. exchange offering. Let's go ahead and look at their chart. You guys are probably gonna like this. You know, this is another great way to make like a ton of money fast. Okay, well, it's down 79%. I love that. Everybody else is like, oh, I'm staying away from that. No, after it dumps and stabilizes, then you buy, and then it goes up. So most coins jumping on an exchange will always dump right away. And believe it or not, seller is still 2.5 times the ICO price, or IEO price, whatever you want to call it. So when they sold up here, it was 5 times what they had paid for it. That's why you see dumps every time. They pay it so cheap. In the USA, we can't invest. Maybe you can if you're using a VPN or you got a friend somewhere. I didn't give you that advice. But foreign, European markets can get these ICOs, and that's where we can make a lot of money if you know that they're going on buying it specifically. So one thing that I always do when I'm scalping is I'm looking and waiting for it to actually dump. Each one moves a little differently, like this might have, if it was a different coin, BitTorrent kind of went up like that. So I'm trying to catch the bounce and jump up like that. That's all timing though. So once you look at volume, the main indicators for this is volume thinning out of sells versus buys. Once we start to slow down and you can look at a different chart and you'll see a little bit better. So we're seeing more volume here because now we have a history of trades. If you go to something like an hour, you can see that it kind of bounced here a little bit, it's flat line. But remember that other chart I showed you? Oh, I don't know what's that. Yeah. So we're looking for a flat one before we might bounce again. I'm not saying it's definitely going to happen, but I bought it on the dip, and I know at some point this is going to go up. Especially when you look at RSI down here. It's like a wave, like water. Goes up, goes down, goes up, goes down. Sometimes it goes down twice. That's why you have stop losses, or you gotta wait until the coin goes up higher than the price that you paid for it. So that's another, that right there is, every time something lists on Binance, you can make like 10 to like 100% easy, especially if you catch every little bounce. And that's why I said holding is probably not the best strategy if you're trying to make gains really fast. What's up?
So, kind of, would you maybe show some perspective on the pumps and dumps from your standpoint?
From the what?
Pumps and dumps.
Pumps and dumps, okay. Pumps and dumps. Okay, I'll tell you how they work really quick. There's 4 tiers. You have the people who created the pump and dump, like a bunch of whales, let's say, your group has $100 million or something. I'm just giving you the rates. You have 5 people that equal $100 million. You're like, hey, let's start a pump and dump. This coin is kind of flat. Okay, so then you have your tier 2 network. So I don't want to shout any names, but I know someone who specifically does this. They have a newsletter that they charge per year. And so they get these people who are paying enough money for the newsletter to know that they have enough money in the game that they're going to be their number 2. So then they tell them, hey, this coin is looking really good. I think something's going to happen. And so they do. You might want to buy some positions. Where they did buy a position. Part 3 is your like Telegram private members like pay for our pump signals, $100 a month. They're already making $100, and then they take that and they put it into the pump. And then make even more money from the money that they just got there. Then your level 4 is, hey, we just started the pump, and it's a Twitter tweet, and everybody's jumping in. Those are the people that lose. Because they're jumping in after it's already pumping, buying at 50 or 100% above. All of a sudden it dumps because all the people had their preset sell orders set. So this is why I don't, I hate them. I've got several of them. Several videos actually filmed live that I put in the course. But this obviously is a pump. 100%. 120%, come on. What else? It just doesn't make any sense. Engine coin, look at that, every 2 hours. Where did all this money come from all of a sudden? you didn't have that many people sitting in front of a computer being, wow, this coin's pumping right now, I have to jump in. I'm going to liquidate all my other positions and get in here. That's not what happened. This is a lot of big money coming in. Let's go to Telegram. Let me just show you something real quick. Pump. See? They're everywhere. Pump groups are all over the place. And nobody's doing anything to shut them down. And people are losing a lot of money doing this. Some people are gaining, more people are losing. I don't agree with it. But what can you do about it? Some of these channels have like 100,000 plus people. That's how you see something like this happening. You can make money on it because after you see this, you're seeing it dump. But usually you're going to see a bounce. That's where you can catch more. So, I mean, there's nothing you can do about it, so you might as well use it to your advantage. If you're going to trade like that. Any other question? Yeah, what's up?
Can you share your slides?
Slides? Oh, yeah. Let me just show you the final here right now, just show you what I do. I teach online, or I have a group where I constantly give calls. I do all the TA, I get all the information, and then I help a bunch of people out. I get a bunch of testimonials. I also do private consulting and training. So for high net worth people or regular investors, you can email me right here, and then I'll send you all these slides. I'll send you all of my resources. I have a bunch of public resources. Quora, I answer a lot of questions there. You can get my TradingView private Facebook group. We try to keep it very filtered out of nonsense, like no Lambo pumps or nothing like that. So CryptoKyle at KyleRea.net. Just everybody can email me and I'll just send you back all my free resources and overview if you guys need any help. I'm always down to help. I'm always online, always in the groups. Cool. Mark looks so boring. Wake up, bro.
Thanks, Kyle.
So when you get in, so how do you know when you get into a coin, you're trying to ride it, how do you know there's enough liquidity that the pumpers aren't like, yeah man, we're all in, and then you buy in and then the liquidity evaporates and you have a sell order, and let's say you have a relatively big position.
There's two things.
You have to press it so it turns on.
There's two things that I would do. First, this one's already pumped, so we're at 21,923 Bitcoins in the past 24-hour volume. You're definitely going to get a sell. Let's just say we're looking at something like this, 154 Bitcoins in the past 24. You need to do the math about how many Bitcoins are you bringing into this trade. What's your percentage of the overall previous 24 hours volume? If there's constant volume moving up and down, like nothing is happening here, you see? We're not seeing anything happening here. Maybe my internet is slow, but I don't think so. When we're looking here, we're looking for constant movement. Is there trades happening? I don't know if the internet's slow, but you'll see it's constantly moving. And we would definitely have liquidity there. So the second answer to that question is...
So right there where it says trade history 000605, that's the Bitcoin price, right? That's per coin in Bitcoin. What is that in dollars?
What, this one right here?
No, the one down there in the green under trade history.
This is how many people are live trading right now. This is how many buys and sells are happening as the trade is going. Right now the internet is, I guess it's not picking up, but there definitely is trades happening right now. On this one, I can guarantee it. Bam, a couple of them moving. When you're looking, someone had mentioned something earlier about fake trade volume.
Yeah.
95% of the exchanges have fake trade volume. Gemini does not. Binance even does. There was Polychain. I don't know if you guys have heard of Polychain. Yeah, great potential in that project. Their Satoshi level, I think I called it at like 12 sats or 14 sats publicly. The thing with that was there was not a lot of liquidity happening at that point. so we could not have sold out on that.
So a lot of whale investors I know are only focused on the top 10 coins.
Yeah.
Because there's depth there, but on the top 10, you don't get the wild swings that you do on the shit coin, the smaller coins. So from a perspective, do you only stick with the top 10? I mean, it seems here like you're going after all sorts of kind of things.
I personally don't, well, unless it's Binance. I personally don't trade a lot of top 10 coins, and I know there's a lot of analysts out there that do, especially because of margin trading. Margin trading will only mess with the top coins, so that there is liquidity. But I am personally looking for altcoins to flip for a much higher percentage growth. What I'm looking for, every day, I'm looking for things like this. Oh, gone 79% down today. And let's just say this was a $10 coin and it went down $7.80. That's only a negative 79%. But if you had $2 and turned it into 10, that is a 500%. So you see the
pull up this coin, CAPP. So here's an example that a year ago this coin was 50 cents, and now it's total in Shitsville. So something like
BitConnect.
So something like this. Look, it's
0.2. It's like 0.2 of a cent.
Yeah.
You said it was how much? 50 cents. We're looking at that. Price 46 cents. Now look. That's why you don't hold. You gotta move sometimes. The market is evolving too fast.
Right. So I mean, my question here. You look at the tail end. The thing is way down. It's not like, does that ever come back? Would you mess with something like this because it's so?
It depends on what exchange. If it's on Binance, yeah. Binance will delist crap coins. They just did. Forgot which.
I mean, so many altcoins. That's the chart. That's the altcoin chart of so many of these things, right? So would you be in something that's 0.2 of a cent that once upon a time was 46 cents? I mean, is there, or look at cents, SENS.
I would not all in on it. No way. I might put a little bit in there if, let's say it was on Binance and we're looking at the flat chart strategy. I would totally do that. A little bit. But I give it some sort of time limit. 30 days. If I don't see anything in 30 days, I'm gonna swap it up because I want to make gains. I'm what you call an aggressive trader. I'm not gonna just sit back. I love to see constant. I want to see growth. You know what I mean?
And do you move everything back to Bitcoin or back to ETH or back to Tether or USD or what? How do you? Are you trying to maximize one of those holdings?
I mean, Bitcoin's my main. I'd rather use Bitcoin than Ethereum market. BNB market is actually pretty good now. If I'm going to go somewhere, I'm going to store it in USD. They have different coins now, which is great. It used to be just Tether, but now we have all kinds of different pairs, like PAX, True USD, USDC. This is good. So now we have options. It's like when you go to Ralph's, you want to get ketchup. You don't want to be stuck with only Heinz ketchup. Maybe you want options. You know what I mean? Yeah, so a lot of people are like, there's too many stable coins on the market. Well, I mean, not everybody wants to just use Tether coin. So JP Morgan doesn't want to use Tether. They want to use their own. It's their own brand. So if they have enough people that are using it, it makes sense to use it. If they don't, it's just another coin that's taking up space.
Well, you guys know how to get a hold of Kyle now, Mr. Kyle Rea. Thank you very much for coming all the way up from LA, and literally he flew up today, and he had a total drama. He was supposed to come out this afternoon, and the flight got canceled 4 times. And then he couldn't get a flight back, so I'm letting him stay with me tonight, so he can get back tomorrow. But Kyle, thank you so much, man. Really appreciate it.
If anybody has questions later, I'm here for the answer. Here we go. Oh, we're done? Oh, what's happened?